I told you that we're going to be having an amazing guest. Na siku hizi tunaongelea story ya maganji, okay? All we're talking about is money, because money runs the world whether we know it or not. And Mr. Meshack Miyogo is here. He's smiling by the way. Sijui kama ana agree na mimi ama ana disagree na mimi. We want to get to just understand who he is, what he does, and of course that journey to financial freedom. We want to secure it once and for all, making sure that you get to understand how money moves, where you need to keep your money, and of course what kind of investments would definitely take you there. So without much ado, I'd like to welcome Mr. Meshack Miyogo, who's the CIC Life Assurance Managing Director, and we're going to be talking about the beginning to that financial journey. Wacha tumpigie makofi as we welcome him right here on the best show in Africa. Bwana MD, karibu sana.
Asante, shukran sana.
Nimekuona tu kwa poster and I was like, oh, this guy is coming to my show. So I was excited.
I like your passion.
Asante.
Yeah.
So talk to us a little bit about yourself other than what you do for CIC.
Yeah.
So that people get to know who you are as a man, what you like to do for fun as well.
Okay.
So as we break the ice together.
Yeah, thank you very much. My name is Meshack Miyogo. I serve at CIC Life Assurance as a managing director. That's work. But outside work, I'm very fun-loving. I'm a family person. I have 4 kids.
Oh, nice.
2 boys, 2 girls. 2 are teenagers. Yeah, the rest are toddlers. My wife also works at Stanbic. Yeah. I love gymming. I used to play rugby.
Oh, nice.
Yeah. My club is Mwamba Rugby Kulabu.
Siku zote.
Yeah. I love traveling. I play golf as well. And I like making networks, mentoring young people. I'm very passionate about sales and financial freedom. I also have a very strong team where I work, and I've seen them grow. So it's something that I really enjoy, working with young people. Yeah, that's me. Yeah.
Just talk to me a little bit about the policies that you have at CIC, and of course there's one that's very enticing. We know and understand that capitation, especially for academics or academia, has been such a big problem. So we'd like you to just interest us in some of the things that we should do first of all to get to that, to get started.
Yeah. So at CIC, we have quite a number of solutions, but probably I'll focus on 2. For those young fellas, we have one solution called Smart Saver. Gives you an opportunity to save for the long term. At the same time, it gives you an opportunity to build your cash flows. From as low as 3,000 shillings, you can be able to do that. We also have, if you're a parent, because I know some of you are young parents, majority I think, based on what I've heard, listeners, probably most of you are young parents, and you can also sample out our solution, Academia. I'm sure when you look around, you'll see billboards, CIC Academia. You just have to make sure that you support your child. And the only thing that you can give your children actually is education. So CIC Life, we are there to give you that opportunity to do that. And of course, pension. Guys, you'll retire.
Whether you like it or not.
Yes. Age is coming. You are older today than you were yesterday.
Fact.
So you got a plan for it. Yeah.
When you talk about planning, we need to also understand that for every paycheck in every house, the largest quantity goes to education. Now, education is one of the biggest expenses for most families. Yeah. And how can parents prepare for it in advance? For example, would you advise me, who does not have a child yet, to start saving for their education?
Yes, you can. You know, if you have those aspirations, you can always put aside something small just to save for your child. Even if, for example, let's use our pension product. From as low as 500 shillings, you can actually start saving towards your pension. But that money you put in there, because it's a personal pension plan, in a few years, once you get your baby, you can easily pull that money and still get an opportunity to pay school fees or something. But most importantly, we have specific life solutions that have an education component and a life cover. Yeah. So you can actually get an education cover even if you don't have a child. But of course you can nominate maybe your niece or somebody, and you can start putting money towards it from as low as 3,000 shillings. Actually, after COVID, we reviewed our solutions downwards just to accommodate the new payslip with the new deductions. We actually reviewed our monthly premiums for our customers to as low as 2,000 shillings, and we've seen a number of customers customers really getting into trying to save. So it's an important aspect. You put money, you save, but at the same time you have protection.
Yeah.
So our education cover gives you protection and at the same time gives you an opportunity to save. It gives you peace of mind that in case anything happens in future, at least your child will still go to school.
Yeah. I love that you've said that for those who have children right now and maybe they are a little bit stretched, considering that they also want to save for their pension, what's a structure that you'd advise for them to have? Say I'm earning 50,000 shillings and I still want to save for my pension and also save for my kids' academia.
Yeah. So I normally say what is important is sacrifice and discipline. As in anything you do, you must have goals. If for example, your goal is maybe you are 120 kgs and you want to shed to 100 kgs, that is your goal. What is your plan to achieve that? You definitely need to watch what you eat, most likely. You can't be saying you want to lose weight and then you're busy punching pizzas,
mandazi,
unakula mbaya sana. As in, you will not achieve that particular goal. So you have to sacrifice. Yes. Even me, I love cakes, I love chocolates, but I have to have, I have to sacrifice some days. I have my cheat days, but I have to sacrifice most of the days. So for you to achieve that goal, you have to sacrifice time in the gym. So if you want to plan for your child's education and at the same time you want to plan for retirement, I think it's important. And I know Kenyans are really a bit stretched, so you might not spread your wings all over, but you can start small. For example, if you want to sacrifice 5,000 shillings out of your paycheck or 50k, you can decide you're putting 2,500 shillings in pension, then 2,500 shillings in an education cover. Or you can decide to put all that money into an education cover. It's still your money. At the end of the day, for the only difference between pension and a life cover, pension gives you a return, but that money does not have a life cover. There's no protection, but an investment with a life cover, it gives you protection in case you are saving for your child and in the unfortunate incidents you lose your life. That child will still go to school because CIC will take over. Even if you've paid for 3 months or 5 months, will take over that policy, will pay those premiums that were supposed to be paid by you if it was for a 10-year policy, and will continue paying. When the time comes for school fees, will give to your guardian, because you have to nominate, of course, your guardian or somebody, just in case anytime you take a life cover, it's important for you to put your beneficiaries and contingent beneficiaries and people who can actually take care of your child. So it's very, very easy. So it depends with your appetite and your I normally say don't sacrifice too much, but you can make a choice between a retirement package and an education cover. But if you ask me, if I have children, the first thing I'll put into focus, at least I'm already living. Naishi niko hapa. Watoto pia lazima niwapatie opportunity ya wao kuishi pia. For them to live a better life than how they found me is to invest in education. So I'll put my money in education.
I love it. Imagine being schooled on how best I can navigate with my monies. And it's just solutions that you need. And of course, Mr. Miyogo, welcome once again. And we'd like to just talk to you about an education plan and why you believe it's safer for me not to save casually. Unajua naweza sema nimeweka pesa, nimeshaweka. But there is also coming up with structures to make sure that hii pesa yangu, it's actually definitely going to work for me.
So there's a myth that people fear insurance, education plans. I think that is just perception. And I have an experience. It's good to bring out the life experience. In my earlier career, when I started working at then NIC Bank, I remember I would get salespeople coming to me and asking me, Meshack, we have a very good solution. You've just gotten your firstborn. We'd like to give you an education cover. And every time I would say I already have one with a different competitor. lying, But at the end of the day, when I got into insurance, when I transitioned from banking to insurance, and I got to understand the importance of insurance and education covers, I think it's something that I'll recommend for any parent who really cares about their children. Number one, it gives you a disciplined way to save. even if it is at 2,000 shillings, 3,000 shillings, an education cover gives you an opportunity to save with a discipline, because it is long term. Once you get in, for example, our life covers for education, they take up to minimum savings is 7 years. And the beauty, the unique feature with our education covers, maybe just to give you how they work, you pay maybe for 7 years. Then when your child goes, let's say you are targeting high school, when they start going to high school, we start giving you partial payments to pay school fees in Form 1, Form 2, Form 3, Form 4. With the current new grading system, the product is already aligned. You can pay for your child's education in grade 9, 10, 11, 12, and then the final maturity. So we normally give our clients a holiday break when they start getting partial maturities. CIC Academia. In the market, no one has that product. You actually pay as you receive. So if you've taken a policy for 12 years, you'll pay for 12 years. For CIC, you take a policy for 12 years, you have a premium term of 7 years, then the 5 years, you're just receiving money. On top of that, you have a life cover in case anything happens. And I've already mentioned, life is very unpredictable. That's why we have insurance for you guys. It's very unpredictable. It gives you that opportunity. In case anything happens to a parent, there's peace of mind. Mtoto bado ataenda shule na atasoma. Maana that is our guarantee. That is our duty. Number two, it gives you an opportunity to make a return. The money you are saving also comes with a return. It doesn't mean you put 2,000 shillings over 10 years and you still get the same amount. There is an extra income you get. But I want to caution savers with life policies. Please don't compare life insurance with a normal investment plan, because it doesn't have a life cover. So the returns might be higher. But for an education cover, the returns might be lower, but also we take care of you. It's like when you insure your car, you pay 40,000, but if that car is stolen or gets damaged, you are paid the full sum assured, maybe 1 million. So you pay less, but in case of an eventuality of a risk materializing, we are able to compensate. Of course, we can't compensate life, but we give a shoulder to cry on. Yeah. So those are some of the things that I would recommend young fellas. Please don't turn away those financial advisors when they come to you. Open, listen. Knowledge is power. Get to understand. You can also check out online and learn. You know, there's a lot of information. So insurance companies are there. CIC is one of them. We have other providers. Just listen and get to make that informed decision. Yeah. So make that sacrifice. Yeah.
I love that you're saying that. And you know, parents are really trying to make a sacrifice, and some of them have modest earnings, and sometimes it's just very hard to navigate considering the economy. So how affordable is an education plan? I don't have enough to even start with, but how much would an education plan
be? Number one, I like to advise our listeners, when you get into insurance, number one, you must have that commitment and discipline. Because life insurance is long term. So for example, if you decide to save with us or any other insurance company in the market, there's something we call surrender value. Surrender means you can only move out of that policy, probably for us it's after 2 years, but standard wise worldwide is normally 3 years. So if you get in and after 6 months you want to come out, you know, and you want to cancel, you lose all your money. That is the reality. As in, if people don't tell you that, that is the reality. You must be committed. So you'd rather normally advise, instead of you sacrificing to put 10,000 shillings because you are ambitious, why don't you start with 2,000 shillings? Even if you lose your job, you can tell the insurance company, I've lost my job, but I'm working hard. I'll come and reinstate my policy. So we'll give you that option to come and redate it. If it was for 10 years, once you're back, we can redate it through a further the month that you've missed out or the year that you've missed out. So those options are there, and insurance companies are trying to really adjust their models to accommodate client needs. So don't shy away. You can start small. Let me just give an example. Go to your WhatsApp right now. How many Harambes are you in?
Mingi. Za harusi, za matanga.
Yeah. So guys, be selfish. Pay yourself first. I'm not saying you don't contribute, but don't contribute for fame or just to show people. You know, pay yourself first. If you're earning 50K, put that aside. Maybe 3,000 to insurance, 2,000 to your SACCO. You know, you are saving. You are putting something for yourself for the future. Then whatever remains comes to your account. You can now decide to support Harambes. You know.
Yes. Hi, we're gonna get deeper in conversation. I'm getting to learn a lot of things, including safety of my money. And when I'm stuck, not able to pay some of, or even to contribute monthly, the policy, I know it works differently in real life. Would you like to touch on that, on what happens if something unexpected happens, like a parent losing their job or passing away before completing the payments? You said, how can we recoup that money again?
Okay. Thank you. So, for example, if a parent passes on, and let's say you've even paid for 10 months, and your policy is for 10 years, maybe just to educate you, insurance is a factor of your premium. The lower the premiums, the lower the sum assured. Today you want to insure your Toyota Premio. Value is 1 million. Insurance premium is 40. You want to insure your Range Rover worth 10 million. Value is 10 million, premium will be 400,000. You know? So 400,000 higher value. So if you are saving, let's say 10,000 shillings, and your sum assured is let's say 1 million, for purposes of just giving an example, that is the sum assured. In case anything happens to you as a parent, the insurance company, even if it is after 10 months, we will pay that sum assured to the next of kin as a buffer. You know, maybe you have a guardian, maybe your spouse, or you've nominated your mom. I know for men, most of them, they nominate their wives. But I know, because I see these documents, for ladies, you know who you normally recommend in those documents.
Do you think it's safe to recommend your wife or your mom?
It's okay. They are the mother of your children, so you can do that. But for ladies, I know they have other options when they want to recommend beneficiaries. But you can put a guardian. For example, if it is your spouse. So as a lump sum will be paid to your spouse. Immediately there is loss of life. Then the policy, the way it is done, it ensures that we continue paying premiums on behalf of the deceased. And then when the time for premium payment, for partial payments for school fees comes, CIC start paying to that spouse if they are still alive. If you lose your child, you can put another child, or we can terminate the policy and give the returns to the parent.
We are just getting started. We are just getting started here, and you're really challenging me to actually make sure that my money works for me. And you said any amount would count, because some people usually assume that I have to get to a millionaire status. That's when I start dividing my money and making sure that it gets to work for me. I don't know what's your take on that.
Well, you can start small, as in a journey of 1,000 miles. You don't need to jump. You can start small. Let me give another example. Today, I like that analog of exercise and losing weight. If you want to lose weight and you say, I want to have a program I run every month, then you run 20 kilometers every Sunday in 1 month. Will you see progress? You won't see progress. But imagine if you're doing even 2 kilometers every day, or 1 kilometer every day, rather than 20 kilometers in a single day, in a single month. You know, so it's okay to start bit by bit.
I love everything that we are talking about on and off air. And he's just asking me a question. And I think I should ask him so that he can give us the answer to all of us. And most of us usually talk about ujaji plan. Ujajipanga wewe bwana. Ujaji plan. And when we talk about finances, we talk about financial planning. We know the term. We can define it. But a good percentage do not know what that is. Practically. How would you describe that to us? Because I want to get to understand it.
Thank you. Well, when just to simplify, financial planning basically is looking at your income and looking at your expenses. How do you balance the two? With financial planning, there are benefits of financial planning: peace of mind, less stress. You know, you're able to achieve certain goals that you want. But basically, it is the income you get versus the expenses you put in. And the expenses is where the problem is. You must really have 3 things for you to be very solid in terms of financial planning. Number 1 is sacrifice. You have to sacrifice some things for you to enjoy financial planning. Number 2, it is your mindset. Do you have a mindset to adapt financial planning, which requires budgeting, as in you have to be forthright. I want to achieve this. Even if I'm earning 20,000 shillings, I can still plan with these 20,000 shillings. Number 3 is discipline. So let me give an example. For example, if you are employed somewhere and you're making your 50,000 shillings a month, that is your pay. Every month you're enjoying your 50,000 shillings. Did you know if you don't do financial planning, by the 3rd day of your receiving your salary you are in debt again.
It's true.
You don't have anything, as in you are now borrowing left, right, and center. You go to those, I'm not discriminating mobile lending, they can come in handy.
But they're the most used.
Yeah, they can really ruin you when you don't plan. So what I normally say is, look at your income. This is 50,000. There are basic needs that I need to achieve, even before I start saving.
Yeah.
Basic needs like rent. You know, I need to take care of my rent. Number 2, I need to take care of clothing. Lazima ungare buda.
Lazima upige luku.
Lazima upige luku.
Yeah,
Sindio?
yeah.
Na luku si lazima uende staki kusema wapi, lakini you can
Extreme,
get
yeah,
extreme.
yeah.
You can still look good, you know. You also need food. Those are basic things. You cannot say you don't have food and you're being employed, you know. So the most important thing is discipline, sacrifice, mindset. Get your money, plan, have a budget. Live within your means. That's part of financial planning. Some of us, you don't want to live within your means. You want to stay in Kilelesho in an SQ where you are paying 30,000 shillings and you're earning 50. You can sacrifice. Go live. I don't know. I don't want to say Roysambu
or outskirts too.
Outskirts where you can get a more affordable house. Yeah. Plan yourself to utilize early in the morning, maybe before rush hour, maybe, or after rush hour. But if you take a mat very early in the morning, you
get to town in time.
Get to town on time. You know, the early bird catches the worm. So start planning your finances early. It is as simple as that. Have the mindset, the discipline, and the sacrifice. Once you put your basic needs into focus, then whatever remains now, you can now start planning to invest.
I love what you're saying, but I'd like you to touch a little bit on long-term financial planning, retirement, and of course it often looks like a distance idea.
Yeah.
And especially for those younger people, why is it important to start saving for retirement early? Juu tunaonanga ni kitu ya mbali. Unaonanga by the time nafika 60 nitakuwa na do.
Yeah.
But then you start getting into the job market, getting that job becomes hard.
Yeah.
You try being an entrepreneur, also making that money within a short period. It doesn't come easy.
Yeah. Yeah.
So why is it important that I should start saving for retirement early?
It's very important, ladies and gentlemen, to start saving for retirement early. Very, very important. And you can start with even the smallest amount of money you can think of. And as CIC have said, we have an option where you can even start from as low as 500 shillings to start at a plan jipange pension plan. You can actually plan. So why is it important for you to focus on your retirement? Number 1, if you are employed, for example, we also take care of people who are not employed. You are an entrepreneur, you do your online gigs. You can still actually access retirement opportunities to save. But let me just give an example of someone who is very comfortable being employed and earning 50,000 shillings. And then the employer tells you they are giving you 10% of your salary as pension, you know. That's almost the normal percentage, 10%. Then you contribute maybe 10%. 10% of 50K is 5K. When you retire at the age of 60, will 5K sustain you? No. It won't sustain you. So enjoy that retirement package from your employer. But be very forthright, as I said, in terms of financial planning. You can also put some money on the side comfortably for retirement. It gives you peace of mind. It gives you an opportunity to take care of emergencies in the future. It makes you have a less stressful life in future. I'm sure you've seen big people who have been, even here in Kenya, serious sportsmen, people who have been in very successful careers, but because they did not plan for retirement, you see them out here languishing in poverty. Why? Because they enjoyed the money at that time, but they did not factor in to save. And with CIC, we recently introduced our USSD, star 304 hash. You can actually go to your phone right now and register star 304 hash. Star 304 hash. You can start planning for your retirement. Take that first option. You can, it's a very simple USSD. Please make sure you start your journey today. If you don't get anything from here, you can actually start saving, and anytime you get some small money, you can always put that money through that USSD.
So you said as early as today I can start saving.
As today. Even now. Even now. Just go to star 304 hash, start saving for yourself. Start planning your retirement.
I love what you're saying. We're just going to play one track, and get to make sure that we get to understand deeply on how pensions can come to save you in a rainy day. People think or say that when you're thinking about a rainy day, maybe you're, the misconception that maybe you might be doing some crazy thing hapo yenye inakufanya, unajua, misconceptions in Africa where we just think about ukianza kufikiria the bad days start coming immediately. But I want you to join the Billionaires Club. Tafadhali, think about it. And of course, we've been touching on why financial planning is important and why you need to start planning for your retirement. But in simple terms, we'd like you to explain the pension plans, what pension plans are and who is eligible for them. Okay. Because eligibility might be maybe sijatosha mboga. And some of the things that you look at, and how does pension plan differ from saving instruments in the market, and what do you have at CIC?
Okay, thank you. I know we've talked about financial planning. I know we are talking to young people. Please, that does not mean hakuna sherehe. You can still do financial planning while you enjoy yourself.
Hapo na umenigusia kwa sababu
usikazie life bana.
Sherehe naye napenda kuipiga ni kama imenikosea.
But make sure you also do what? You plan for the future. Yes. And you plan for the future by, sherehe huwezi kula huko baadaye. You can plan for it as well.
Yes.
But please ensure you start saving and putting something. So, how is pension products different from other solutions? As I said earlier, a pension product basically is geared towards retirement. We give you an option to save. As you save, when you retire, you can take that money, and most insurance companies like CIC, we have what we call an annuity plan. When you retire, now you want your pension money, we give you an option to buy an annuity plan. Annuity basically means you give us the money back, then we start paying you with a return again for the rest of your life. You can choose 10 years, 20 years. So every month is like you are still being paid. You still get money, you still earn. And I don't know, this is for you to decide who saves better, women or men. I think
women save everything.
Women save
everything.
Save more than men. Yeah. So my warning sign to the young men listening to me, or even old men, please be selfish as well. Start saving for yourself, because when you get older, you get 60, your children have left the house, they've gone up to maybe the US. The person who's likely to get an invite to go to the US
is their mother.
You will stay at home, my friend, and staying at home without money, you'll be miserable. So please, as men also, I want to give a rallying call. Get to *304# and start saving for today. That retirement. You need to put money on the side. Now, the other thing with pension, there's a return. Like for CIC, we've been giving a net return of 11%. That's a very good return, by the way. And as a company, we are really trying to make sure we give a double digit if the market allows. But the minimum guarantee is 5%. So your money also gets a compound interest over the years. So your money does not just stay there, it also grows. So that's a very good option. Now, if you think you've saved enough in pension, we also have our sister company. I know most of you have what we call money market fund. CIC is a market leader in that area. You can also give us a try on that particular area. It's still part of saving. It gives you flexibility. So the difference between pension and money market, pension, you put it for long term. Money market, for example, with CIC, it gives you an option to come out anytime you want, as long as you are saving with us. You can always opt out anytime you can get your money back. And the beauty is, the minimum contribution is still 500. Eligibility, you just need to be above 18 years, for you to start enjoying our pension solution.
I love that you said that, because most people usually think that some of these things are very tough, and when it comes to saving money, they think that you need to save a lump sum or a huge amount. And I love that you've just broken it down and just helping us to understand that you can start dividing your money small, and saving for the future. But people often think that pensions are for those with salaries.
Yes.
How flexible is CIC with pensions?
It is
very, for someone who's not earning.
It is very flexible. Once you are our customer in our Jipange pension plan, and I've given you a USSD *304#, even if you're not permanently employed, you are not employed, you do gigs, maybe you are a waiter, once in a while you get a job, you can still save using our platform through online, through the USSD. You can come to our offices. You can talk to our financial advisors. It is that flexibility. Anybody is targeted. Of course, we have corporate schemes for employers. We also have our umbrella scheme for employers, and we are very, very competitive. We are among the market leaders as well. And most importantly, we give you peace of mind in terms of the return. Number two, CIC is a solid insurance company. It is owned by the cooperative movement. Cooperative Bank is a major shareholder. A SACCO, even Nation SACCO here, those are shareholders. The Safaricom SACCO. We have Stima. We have Mwalimu. We have Gusi. If you come from Kericho, Imarisha, you come from Meru Solution. As in, this is a company that is solid. Your money is safe with us. We are locally owned, and we are very, very forthright in terms of our performance, and we keep our word. We have a reputation to keep, and we also value our customers. So I want to encourage Kenyans, whether you are employed or not employed, you still have an option to still invest with us in pension or even education covers. You can pay monthly, quarterly, semi-annually, you know. So we have those options that you can be able to enjoy. Yeah.
Mr. Miyogo, thank you so much for creating time to talk to us, and I'd definitely want to just give you a cheer and applause for what you're doing at CIC. Also for sharing your personal life with me.